And once again, you're welcome to the Lamad community, and for everyone who is here, watching, listening, you are welcome. What we're taking a look at today is cryptonomics, and it's something that is very important. Really, that everyone who is into financial technology or economics, financial economics, or anything along those lines, even politics and leadership, business, really, needs to take a bit more seriously, okay? Because this is going to determine how a lot of things play out eventually, and so it's important for you to learn how to take more strategic positioning with regards to economy, with regards to finance, and even into the whole thing about cryptocurrencies and digital currencies. Now, cryptocurrencies and digital currencies is the future of finance, is the future of economics, is the future of commerce. Okay, and so you must begin to know how to align yourself, you know, even before everything, there's a mayhem out there. Okay, you already begin to have your plan, your strategic plan, in order for you to be able to make more accurate decisions and more informed decisions, for the betterment of your life, really. Okay, so let's just get on with it. At this point, when this recording took place, that's 2020, 2021, I beg your pardon, you have to understand that cryptocurrencies is still relatively new. Okay, it's a new technology, like new in the sense that going public. Okay, it's been something that has been used long before now, in the dark web, in the hackers communities, just to transfer files and store files in a very encrypted format. It was not until recently when it became a tender, that's a means of exchange and some form of storage of value. So everything that comes with being an infant is also being experienced with blockchain and cryptocurrencies. And what are the things that you expect from an infant? A child that is just still born, a lot of things are still developing, the organs, it's adjusting to the weather, the climate. Sometimes it gets sick, its immune system is not yet as really boosted as it should be, and these are normal. They're normal things you expect from children. It still has to be fed with milk, they can't start taking raw food at the moment, and all of that. Okay, so we need to see the cryptocurrencies and the blockchain technology as such. That being said, it means that it is still an innovative product. A lot of things are still in the pipeline. There's still constant development. There is nothing that you know about cryptocurrencies and blockchain right now that is cast in stone. Everything is still fluid. Everything is still flexible. Okay, so you have to know that it's even of more risk if all you're doing is leveraging on what cryptocurrency is right now. That is a great risk, because anything could happen that totally disrupts the face of the blockchain industry, and that is why you need to understand how cryptonomics works and how you can actually put it to your own advantage. Okay, so you need to understand, when we're talking about cryptocurrencies and blockchain technology, now it thrives on decentralization. Now, when it comes to decentralization, there will always be problems when you use a centralized sense to run a decentralized system. So the system of finance that we have, the system of economics that we have, the system of politics and leadership and business structuring is still a bit more centralized. So bringing decentralization into a centralized system creates chaos. Okay, so everything we're seeing right now is actually preempted, because that is usually what happens. There will be a reaction between a centralized system that seems to be losing its power and a decentralized system that is chaotic and you don't really fully understand its extent or its potentialities. Okay, so what we're experiencing right now is normal. There will be that chaos, there will be problems, there will be contentions, there will be innovations, products will die, products will be reborn. That is what decentralization affords you. But one important thing about decentralization is ownership and control to the individual. Okay, and the reason why this is important is that when decentralization comes to people who are unskilled, they destroy the total system. Okay, now decentralization works better in a pseudo system. There needs to be some form of framework, there needs to be some form of coding and environment and control that gives decentralization its power and appeal. So this has to be monitored by those who are skilled. So, in a way, decentralization is not absolute freedom or absolute control. It just means, for now, taking control off of centralized body and giving that decision-making power to, the individual, and that's what we're at now. So, it doesn't mean centralized systems will cease to exist. It just means that a lot of the power that the centralized system have right now will be stripped from them and given to the individual. So it will no longer be the individuals who serve the centralized system. It will be the centralized systems that go persuading and seeking after people. Do you understand how that works? Okay, so that's the whole core about decentralization, and it's really going to help our thinking even as we move on ahead with the things ahead of us. Now, in the world that we're at today, when it comes to blockchain, when it comes to cryptocurrency, we actually have to take a look at it. Who do we have running the show? Do we have investors running the show, or we have opportunists running the show? Now, when you're an investor, you're actually thinking long term, you're thinking legacy, you're thinking profit that is cascading over a long period of time. But when you're an opportunist, you're only thinking about the moment and you're only thinking about yourself. And so you need to understand, how well do you know the market? That's what lets you know if you're an investor or an opportunist. A lot of people who call themselves crypto investors are not. They're simply opportunists. As an investor, how well do you know the financial market? Do you have it at the back of your palms? Okay, do you have so much experience in it? What's your relationship with due diligence? Do you always rush after the next available coin that seems to be making it? Or you really do your due diligence to research the industry, research the company, look at their market capitalization, look at their volume, look at the value that they have and the evaluation? What are the things you actually put into consideration before investing or buying or trading? All of these things are important, and they are the thin line that determine whether you're really an investor or you're simply an opportunist. Now, there is also, this is quite funny, there is also the illusion of theoretical knowledge. Just because you read something from a book or you read an article online doesn't mean you understand blockchain or you understand how crypto works or you understand how trading works. A lot of people have a little bit of knowledge and they go running, they take off like a tornado, and they believe that they're masters, they're experts, and now they're teaching people, they're training people, they're coaching people. These are just disasters waiting to happen. You need to have at least 3 to 5 years of observation of the market without making profit. So what you're doing is you're developing your mind, you're developing your soul, you're developing yourself, you're gaining exposure and experience even before you start to think about profits. Okay, this is important because if you've not made mistake, if you've not lost money, you're not an investor. An opportunist is someone who is looking for ways to only win and not lose, because there is more lessons you get to learn by losing than from winning. And that's one thing people need to understand. Okay, you need to understand and know the financial market cycle of profit and loss. For example, a lot of people who are just into cryptocurrencies in 2021 are making a fuss about the whole crashing bearish system. But those who have been for about 5 years, they understand the game. They know these things go up and down. They've studied the cycle. They know when to invest. They know when to pull out. Okay, and this is what investors do. Knowledge about the industry. Now, you need to understand that the financial market is like an organism in itself, and organisms respond. It's alive, it has a sense of pseudo life, and it responds in certain ways. You need to know the market, know how it responds to people, to things, to policies, to opportunities, to seasons, and you cannot just know these things by reading a book. You have to experience it in order to gain mastery of these things. Okay, that's the role of experience and exposure. An opportunist doesn't have experience or exposure. An investor, on the other hand, has experience and exposure, or is seeking experience and exposure. Okay, because there are realities of risk. It's a volatile market. I'm quite surprised when people take cryptocurrencies like real estate. Cryptocurrencies is very volatile. Anything could happen, and you could lose all of your earnings in an hour, and you could gain it all in weeks. Okay, so it's very volatile, and you need to understand the risks involved, especially with cryptocurrencies. Okay, now you also need to understand that there's a certain role that greed is playing in this particular industry, and that is crippling. Now, greed is crippling the innovation of cryptocurrencies. Okay, it is jumping too many processes for the maturity in the process of the technology. Like I mentioned earlier, the technology is still relatively young, and what greed does is it doesn't let you go through the due process. It wants you to skip things, takes the quickest turn, the path of least resistance, and all of that because you have only one thing at the back of your mind, and that's money, making money. As an investor, it goes beyond the money. The money is a return for the experience you have had. But if you're greedy and you don't seek experience, you will always cut in corners and trying to find ways to dupe people. A lot of people are actually going to fall for this because there are lots of crypto exchange platforms that might pack up because the core and the purpose behind this creation is to fuel greed, and you need to understand this. And there are certain things you really need to look out for, especially in platforms and exchanges, to know what is, if it's something that stands to last for the long term. Okay, if there are shady things, if there's no transparency and all of that, these are red flags that you really need to begin to consider to take away. Okay, now, so when we're talking about cryptonomics, you also have to understand the power of control and how you can rise from the lowest level to the highest echelon. Okay, so who controls crypto market? Who is responsible for the bearish and the bullish movement? Who swings the pendulum and in whose side? Who determines what coin is doing well? Who determines who is making the profit and the loss? It's important because if crypto is here for the long haul, okay, centralized systems are still going to put a very strong fight, but you have to understand who controls it and know where you are, because where you are lets you know the amount of risk you need to handle and the kind of decisions you need to make along the line. Now we have whales. Okay, whales determine a lot about the swinging of the market. When a whale suddenly sells off coins, it shakes the market. Or when a whale suddenly buys coins, it's the market reacts to it. Okay, so it's important for you to begin to look out for the whales in the industry you belong to, the whales of the coins you're invested in, because they determine how a lot of things happen around, and the core about cryptocurrency also is to try as much as possible to relinquish that power that the whales have, because whales make a decentralized system seem centralized, because if they have all the power, then they control how everything works, and that's not really decentralized, is it? Okay, so whales determine how the market works and who controls the market. Exchange platforms also have so much power, and that's the reason why the government is on their necks to make sure that they don't have so much power. It's the same thing with industries or companies like Google, like Facebook. When they're beginning to have a monopoly of things, the government tries to see how they break that power and spread it across, even though we know the government might not really have the best of intentions, for some of these things. But it is what it is, and we have to learn to live with it. Exchange platforms control, basically, they have information, they have data, and they're the platform through which the trading occurs. Okay, so if anything happens to the platform, you could be saying bye bye to all of your investments. Okay, so it's also something fundamentally important to take a look at. We also have influencers. Okay, some of them are whales, some of them own platforms, but they are people, okay, who leave comments, who speak, who say things, okay? And these things can persuade people to make certain decisions and choices, okay? They also have power. So, around 2021, people like Elon Musk really had so much power. His tweets could swing the cryptocurrency markets, back and forth, because he seemed to be an influencer. And his marketing has been genius lately. Okay, so these are the kind of people to look out for. And if you are not yet any of these three, then you still do not have the power that you think decentralization affords you. Okay, now that being said, centralized government and policies are also trying to get in on the market to find some bit of control or standardization to the whole decentralized system. But let's see how that goes on the long run. We never can tell if it's going to be in the interest of everybody at large. And our brothers in the East, China. China is really, one of the aim of China is global domination, and global domination through government, global domination through economy, global domination through finance, and all of that. And so China is really working hard to clone and imitate everything that is happening in the West and in the Central in order to make it work. So it blocks itself. I can actually tell you that China is that country that is using a decentralized template to run its government. Okay, it's shielded from the United Nations. It's shielded, from a lot of companies in the West and in the Central. It's doing its own thing, and really, that's what decentralization is. But it's China is someone to look out for. Is a country to look out for, because they also keep growing increasingly powerful every day, and so they can determine a lot of things, especially with the digital currencies coming in, the e-yuan, the e-dollars, and I'm sure e-pounds is really going to follow in as soon as possible, and even e-francs as well. So when we start having the economy of digital currencies, not cryptocurrencies, digital currencies, that's digital fiat, then you need to begin to understand that the game is about to change. Okay, and it's a serious change, that is coming into the financial markets and the financial industry. So, when it comes to essentials for cryptocurrencies, what are the things that you need to know? What are the things you need to be a bit more mindful of? So, for example, your wallet security is very key. Your wallet is your bank. If anything happens to the bank, you're saying goodbye to all your fortunes. Okay, so a lot of people do not take the security of their wallet seriously, and I'm bothered, I'm concerned. Okay, because it's important. That is the platform where you're in keeping all of your investment or making all of your investment. So the security of your wallet is very paramount and very important. Okay, now the history and the potentials of the exchange platform is also something you need to look out for. Before you rush to start signing up for certain exchange platform, try to read about it, review what people are saying about it. Who is the CEO? Where are they from? What country? Is it from Russia? Is it from China? Is it from Korea? Is it from the United States? Is it from France, Netherlands? Wherever they are, the location of a place actually says a lot about the potentialities and the future of such exchange platforms. Okay, now, are your cryptocurrencies cryptograph secure? It's weird when you're having a cryptocurrency and you don't understand cryptography. Cryptography is a security protocol that helps in encrypting data or certain platforms. So if you're running cryptocurrency, I think it will only be wise for you to engage cryptographic mechanisms in securing your cryptocurrencies. Now, you also need to note that your cryptocurrencies are not entirely safe if they are soft. So that means if they're on the exchange platforms, they're virtual. Sometimes it's best to store them in hard disks or hard drives in order to have them handy with you. But it also, there are pros and cons to everything. It's something you have to take with you everywhere. It's just kind of like having a backup, to your files. It really helps with its insurance potential. Okay, access to real-time information and news is also important for you as someone who deals in cryptocurrencies. Twitter seems to be the go-to place for real-time information of what's happening. Okay, let's hope it doesn't get banned in your country. Okay, so you need access to real-time information and news as a trader or an investor. This allows you to make quick decisions based on what is happening or what you can preempt, that is already about to take place. So, for example, if it's going to rain, you start seeing clouds. The moment clouds start gathering and it's like a nimbulocumulus, that's all those storm clouds gathering, then you know a storm is about to hit, and then you go into shelter and prepare yourself for impact. So that is that about personal your wallet security and your coins and all. You also need to understand your trail. What's your trail on the because it's cryptocurrencies? Are you traceable? You have to be intentional about this as well. So, for example, do not use a general email for your cryptocurrencies. You need to have a dedicated email for registration. Anything you have to do that has to do with cryptocurrencies, it must be dedicated. Okay, dedicated email address, dedicated phone numbers, your social security number or your NIN, maybe for those in Nigeria. Okay, how do you mask your trail? Because the moment you begin to enter all of these details while you register on the exchange platforms, you're not really as secure as you think you are. Okay, and that's why cryptographic security is very important. Okay, but you need to know how to mask your trail. That's the whole idea. When you're investing in cryptocurrencies, your bank details. Who do you give your bank details to? Everyone who has access to your bank detail, no matter what the privacy, confidentiality stuff is, whoever you give your bank details to has access to you. So it will not be wise for you to put your the point is have a dedicated bank account for your cryptocurrencies. Do not use the account you use for normal transactions, to run cryptocurrencies or anything of that sort. Everything you do with cryptocurrency needs to be dedicated because that's what decentralization is about. It shouldn't be centralized. You shouldn't be easy to spot. You shouldn't be easy to be seen. Okay, that's what it's all about. Okay, and sometimes VPN, a secure VPN, the one you paid for, not the free ones. Okay, even the one you paid for, you have to make sure that it is decentralized enough to stay hidden, just so that you are able to mask your truth. That's the whole idea. You need to learn from Satoshi Nakamoto. That's the supposedly the pseudonymous person who developed the Bitcoin, the white paper for the Bitcoin, the reference implementations for Bitcoin, and even the database. Why do you think the person who, or the people who created Bitcoin are decentralized? And you, who you are trading, working, investing in Bitcoin, you are centralized, or you have a trail. Think about it. Okay, in cryptonomics, you need to understand the economics of cryptocurrencies. Okay, as much as possible, be as decentralized, be as hidden as possible. The browsers you use, the apps you use, try as much as possible not to give yourself off. Okay, this security is very important. Now, for those who are Nigerians, especially in 2021, you need to understand some things personally. Now, for you, you need to understand that there is a platform for peer-to-peer trading or exchange. You need to have P2P trust. Whether it's on the grid or off the grid, whenever you're exchanging, buying, or selling coins, make sure the person you're selling to is a trusted person. Do not trust someone because they are on a trusted platform. Trust the person because you trust the person. You need to seek out elements of trust before you trade with someone. Get to know them in a way. Yes, I understand things are decentralized, but, or better still, people you know personally who probably are traders in cryptocurrencies, that if anything happens, you can go to them, complain to them, arrest them, as the case may be. That is trust. That is insurance, because we're talking about money here. We're talking about investments. Okay, so these things are key and important. And also, the Naira exchange rate is an illusion. It's an illusion of wealth, because Naira keeps getting devalued. It is not advisable for you to trade in Naira. It is not advisable for you to view your investment or your portfolio in Naira. Try to see other stable coins, okay? Because I don't know if Naira, as the state as it is now, should be considered a stable coin, because the idea of a stable coin is you can hedge it. It's like gold. You can hedge it. It remains stable for a long period of time, or it's not as volatile as other things. And the Naira at the moment isn't anything to be trusted. Okay, so it might be best or better for you to seek hedging it against certain stable coins, that could hold a lot more. So maybe the dollar, the pound, or even the yuan, if you're trading in China or around that. Okay, so that is something important. Do not exchange in Naira. Do not trade in Naira. It is not best for your investments. Okay, have a foreign account for foreign currencies. Okay, if you are trading in dollars, have a dollar account. If you're trading in pound, have a pound account. Anywhere you are you don't have to be in the UK for you to have a pound account. You can always have online accounts. Just make sure it's legit and you have access to it. You have cards to it. You can make transfers, and you have absolute control over these accounts. This makes your trading a lot easier. Why is this important? When it comes to trading, what a lot of people don't know is that you must be calculating when you trade. So when before you go trading, I don't know why sometimes people can be deluded. Before you go into an investment, you should know how much you are hoping to make out of it. If you're going into a trade, you should know how much you're hoping to make from it. And it's the greed we talked about at the beginning. Okay, so if I have $100 and I'm hoping to make $10 from it in a single trade, and I happen to make $120, that means I have $10 extra. What you should do is that $10 extra that you make, take it out of that platform and put it in an account, a foreign account, and keep it there, and let interest continue to grow normally, normally on it. But a lot of people are greedy because they want to make more money. They start everything together and they keep trading with it, and something happens and they lose everything. Okay, so financial advice is very important. Financial strategy is also key when it comes to investment. And it's sad that a lot of people don't have people who advise them on investment. And that's because people don't want to pay for professional services as well, especially if you're in Nigeria. So it's something to really think about. So only keep what you want to trade with on exchange wallet. It's very important. The moment you make a profit above your margin, take it out. Okay, now I know that sometimes the exchange platforms make that difficult because whenever you want to exchange or transfer, there is a fee, and sometimes the fee could actually be wiping away the interest you've made. That is understandable. So it means that whenever you want to do that, you have to put the fees into consideration before you make transfer. So how much you wish to gain must be inclusive of the transfer fee, to porting it out into your foreign accounts. Okay, so this is for personal. And talking about policy, do not use centralized banks for exchanges. We've made this clear. Always have decentralized platforms, decentralized apps, decentralized media for decentralized currencies. It's just the wise thing to do. Okay. Is VPN an option? Yes and no. If you are The only option I would say for VPN is the one that is by subscription, because the safety and the security is more guaranteed. Okay, because if you're going for all this free VPN, they could be access to all of the things you're doing. They're seeing you, they have access to your information and your contacts and all of that, and that may not really be in the best interest of your brand. Okay, so you need to look out at other locations for investment infrastructures. Okay, that if Nigeria is not a good place for investment, their policies are not right. Ghana could be an example. Search out for other African nations, South Africa, Ethiopia, that they have a stable currency, or that is par or better than the naira valuation, and then use that as a more secure way to invest until the Nigerian government come back to their senses and make trading and commerce a lot more profitable. Okay, have the right network of people. I cannot overemphasize the importance of having people. Do not trade as a lone ranger, no matter how much knowledge or experience you think you have. There is always leverage, there is quality, there is power in numbers, and it's one of the things we're going to be taking a look at here. So, what is the importance of network for investors or a network of investors? It's key. The first thing is power. Now, focus power to move and to make things happen. When you have people who come together, there is power in the coming together, there's power in the integration and the amalgamation of people who have a singular aim, a goal, and they're always working towards, making that thing happen. So power is something to leverage on. It always helps you on the long run. Also, you need to understand the real-time intelligence. Okay, so when you are in a network of people, they have different access points, different sources. So when they bring all the information from their sources, it gives you the perception of a more accurate form of information, and then you can make your decision based off of that. Okay, so spread the reach of the information you can get as quickly as possible in order to make better and prompt decisions. Also, capital is important. Profit comes with access to more capital, which can be engaged via a corporation or a pool of funds. The more capital you have, the more profit you can make. Obviously, the more interest you have. Obviously, okay, and so you need to begin to think about this, and especially when you are united and you know yourselves and you have a goal, and there's always something to gain from working with more people. And also leveraging on a community. You grow better when you're in a community or a network that fits your acumen, intel, skill, and there can be opportunities for mentoring, and that's how to grow. Okay, it's more difficult to grow on your own by yourself. It's easier to grow when you have leverage to communities or networks of people who are doing similar things to what you're doing. Okay, so do not forget this. It is very important, and it could save your life one day. Okay, so for everyone who is trading, for everyone who is in the cryptocurrency sphere, I wish you all the best, and I hope that you really gain the best from your sojourning in this particular industry. To the next time I see you, to the next time I come your way, keep smashing and keep being great.